come to questions 8. If we look at these questions, it's quite similar with the previous questions that we have. So we'll look at the informations given. Okay, first one, during the year, non-current asset has been sold. Book value is 300,000, sold for 375. So as usual, we have to open our NCA accounts, non-current asset accounts. Now look at this question, they give you accumulated depreciation. So basically you need to open accumulated depreciations. Okay, so BD for these questions, here opening balance 9,000. Okay, closing balance is 10950. So this is your CD. Now during the year, according to this one, a non-current asset cost 1.5 million, book value is 300,000, was sold for this amount. So the disposal value here is 1,005. Okay, in your disposal account, they say that disposal value 1,005, but then has been sold, means this is your bank or cash. Okay, this amount sold for 375. Okay, so this is from your NCA. Now, how much is the accumulated depreciations? If you look at these questions, it mentions that the net book value, okay, the book value for this asset at the end of the year is only 300. Means the accumulated depreciation will be 1,005 minus 300, 1,002. So it comes to here, disposal 1,002. We'll settle accounts by accounts. So if you look at here, the balancing figures in your non-current asset accounts, according to the questions, okay, in B, this says that land acquired in year 0 was revaluated upward by 750 in preparing the income statement for the year 2. So it means that these revaluations, initially it was 0, but now in year 2 it becomes 750. So as we mentioned previously in few questions 2, 3, 4, okay, it mentions that on this side is you will have another 2 items. If you have, okay, it will be cash and revaluations. If you have not necessarily you will have revaluations every time. Okay, revaluations here, then the figures will be 750. So the balancings will be your purchase for the year. So during the year you have purchased this amount. Okay, now purchasing is a cash outflow in your investment activities. Later on you have to minus it. So settle your NCA accounts, then we'll go on to accumulated depreciations. BD, according to the questions, in year 1 is 3,300. In year 2 is 3,600. Okay, so here you have your carry down. Now, in total here you have 4,008. So this will be your current year depreciations. Okay, 4,008 means here you have 1,500. So this one, depreciation, you are going to add back to your adjustment in your cash flow activities later. In this account, you have a balancing figures of 75. This is your profit figures. Now, profit does not mean cash. If you look at this transaction, the cash you receive is 375, but the profit that you earn is 75. In your profit and loss, you recorded 75. The cash you receive is 375. So we'll record cash amount, not the profit amount in cash flow. Okay, so we settle your disposal account. So look at this, these 2 accounts done. Okay, then we shall go to, now current asset we're not going to look at it because later on when you prepare the cash flow on you're going to look at it. Now you need to look at your capital accounts. So if you look at share capitals, balance is 2250. Okay, closing is 3,000. This is your CD. So means during the year you actually increase 750. Since it's a cash on share capital, so it's a financing figures. Now same thing go for your share premium. So share premium opening is 750. Okay, during the year, this is your BD. Okay, during the year you have increased to 1,200. So you have actually increased 450. So this is your financing activities. End of the year you have 1,200. Okay, so this is your closing figures. Next one, after you have done with this 2, okay, 3, this one also done. Then we look at your loan notes account. Okay, loan notes account, opening is 1,500. Then year end you have 750, means that you actually pay back your loan. Okay, CD. So during this year you have 750. This is cash amount. Now since it's a loan payment, so it's a financing activities. Then this one done. Trade payables, bank overdraft. Payables you are going to use later on. Pay overdrafts you are going to check on your cash flow later. Interest due is half yearly. Interest due is half yearly on 30th of September and 31st of March and was paid on the due date. The company repay loan amount on 31st of March year 2. 31st of March, if you look at here, 31st of March year 2 means that you're actually using the loan amount for the whole full years. Right, look at here, I'm using 1,005, using your money of 1,005 from first day until the last day of the year. So when I pay you interest, I'll be using 10% times 1,005 for the whole year because I use your money for the whole year. So the interest will be here. 10% times 1,005, 150. Okay. Then the last one, profit after interest was 405, no dividend paid during the year. So in this case, return earnings is not required because you already have the profit after interest figures and no dividend was paid for the year. Okay. Okay. We shall prepare the cash flow statement. So first we start from profit before tax. Okay. Now this one, profit before tax, was given in the questions. So here they tell you profit before tax for the year was 405. So you start with 405. And then depreciations. Here you have your accumulated depreciations 1,005. So you have to add back 1,005 because previously you minus it. It's a non-cash item, but you minus it, so now we have to add back. Profit on sale or disposal, 75, minus out because previously you add in, but this is a non-cash item, you should not add in. Interest, just now we mentioned this is 150. Okay, so you have to add back because previously you minus it. So now you have a inventory, check on your inventory, 1215 to 1350. There is an increase in inventory. Now the increase in inventory basically means you pay to buy the inventory. It's a negative sign, negative 135. Okay. Next is decrease in trade receivables, 1350 to 1290. So it is a decrease means that they're actually paying you money. That's why their debt to you is decreased. So decrease in receivable is increase in your cash flow. And the last one is increase in your payables. So you always have to refer to these three. Okay, trade and payables, 990 and 1080 means that you did not pay them, so you have more cash with you. Okay, 90. So cash from your operations, in total you get 1995. Okay, minus the interest paid, same here, the same amount you have interest paid, 150, because in this question we don't have any interest payable. The figure will be different only when you have interest payable. Okay, so now the net cash flow from operating activities is 1845. Okay, next one, purchase of property, plant, equipment. If you refer to here, this is your purchase amount, so total you have 2007. Since you purchase means your money go out to purchase. Next is proceed from sales of non-current asset, means here proceed, how much you receive when you sell your non-current asset, you receive 375. So at the end, in total, you actually have spent 2,325 net cash outflow. Okay. The last one will be your share capital. Share capital you receive this amount, 750 plus 450. So total you receive 1,200. But you pay back a loan amount of 750. So here is negative 750. In total, the cash flow from financing activities is actually 450 in terms of net cash inflow. So if you combine these three, then you will notice that there is a negative 30 here, negative 30. So here, negative 30, this is a decrease in cash flow. Cash flow at the beginning, if you look at here, you have 60 and opening overdraft is 195. So means opening you have minus 135. And then at the end of the period, if you look at these two, at the end of the period you should have 165. The total of it is a negative 165. In order to double confirm these figures, we check on here. 270 minus 105, you get the same answer, 165. Okay, that's all.